Hello, my name is Jeremy Thompson-Cook. I'm the Chief Economist and Senior Portfolio Manager here at Audere Solutions, and this is our October FX report. Now, heading into Q4, everything seems to be trending very much in favour of the United States dollar. Data out of the United States, very, very strong still. We have seen some slackening of the data, and particularly the inflation and employment pictures, both in Europe and in the United Kingdom, which have allowed sterling and the euro to kind of fight it out amongst themselves, but the dollar to remain pretty strong heading into that, say, last quarter of 2023. That looks likely to continue. Certainly, the unemployment data that we had out towards the end of last week was very, very strong in the United States. And we are recording this the day after the invasion of southern Israel by Hamas out of the Palestinian-occupied territories, which obviously has created a huge amount of fear within markets around, A, what it does for that particular part of the world, but secondly, maybe from a more economics point of view, what it means for oil markets. Now, oil markets are likely to be the way that risk is traded as a result of this conflict, and given the dollar's tie to oil, the likelihood that, dare I say, that Iran has been supporting some of these efforts by Hamas and the marginal effects of the Iranian oil exports and what it means for wider markets even, you could expect, therefore, oil prices move higher as a result of sanctions on Iranian oil. Inflation starts to pick up once again, and unfortunately those countries out there, those continents out there, Europe and Asia in particular, who do not have energy independence like the United States does in regards to oil, that could mean higher energy prices there, higher inflation there, but with central banks unable or unwilling to raise rates closer than where they are, that means lower currencies. So the dollar looking strong from both an inflation point of view, but also from a risk awareness point of view as well. Heading into November, heading into the middle part of the quarter, we're likely to see things out of the UK, the autumn statement, for example. But in the grand scheme of things, October is likely to be a fairly quiet month. A couple of things to bear in mind, however. We are heading into the colder part of the year. We are likely to see more and more headlines around household bills, how we're paying for gas, how we're paying for electricity, all that kind of thing, as a result of higher debt servicing, that higher cost of debt servicing that many people have as a result of increases in interest rates and therefore increased mortgage payments if they've moved off of fixed terms, or if they were on variable terms. That means less money to spend elsewhere. So continue to keep an eye on consumers and how consumers are faring, because if they start to wobble, UK growth, European growth for a lot of countries, Germany, France, the Netherlands, all those places, still a lot powered by those consumers. And if they are, say, if they stumble heading into Christmas, then the conversations around recessions towards the early part of next year will heighten. As I said, the dollar will continue to beat up on the pound and on the euro. Near-term forecasts for sterling dollar down below 120 now, as a result of that good data out of the US. 104 to 106 seems to be the trading range for euro dollar. There's not much getting in the way of the USD at the moment. If you have any questions on this, how to hedge your risk, an independent look at how you're currently doing it to make sure it's working for your business, both in the short and longer term, feel free to get in touch. But for now, that's it from us here at Audere Solutions. Speak soon.